Hello and welcome to Always with Awareness. I'm Awa Mel.
And I'm Douglas Lodmell. And today we're actually going to go to the Mind of Money Part 2.
That's right.
Since really we just scratched the surface and now we're thinking about all the little details. And so, let's talk about some of the systematic things.
All right, let's do it.
And these are a lot of things that are we've talked about before in Mind of Money for young people. But the questions we're getting from this are really, okay, great. It's the theory behind it is good, but what's the practice?
Exactly. And I think today that's where we're going to dive in, because I have a lot of questions. And living with somebody like you who has all the system down, but the practice of every day, I think, is missing with just the normal people.
Yeah, all of us.
All of us. So let's do it.
Okay. All right. So give me a question.
Well, my question to you is, first of all, let's put down what is money? What are the forms of money, which is money and credit, right? And what is the system that is put in place here in America, because we hear Americans talking about here, that these kids, all of us, need to understand, because this is what I realize. There is 3 types of people: the ones who are afraid of money, afraid of credit, the ones who do not understand it, but yet using it, and the one who understands it very well and using it really for themselves. So can you just clarify? Is that right? Is the way to sum it up?
Yeah, I think so. So, and this was not intuitive. Again, I had a lot of training around this, a finance major and all the way to law school and a tax, master's in law. And it still was not clear to me. I didn't learn this till well after law school, as I started looking at the money system itself, because it's kind of glossed over. It's not explained well because of several reasons. But one, it's not understood well by most people. They simply don't understand the money system, how we create money. And then, of course, there's a desire not to really understand it or share how it really works.
Really?
Yeah, I think so, because I think it's easier to be used by the system than to use the system if you don't have a good understanding of it.
Agreed.
And there's some interest in that, from some parts. So, but we all think there's just this money supply, right?
Yes.
Let's call it $1 trillion. Oh, and this $1 trillion is just circulated around, and that's our money supply. But that's not how it works. There's a money supply. So if we go back to our island with 100 people and they have some shells, that's how it worked there.
That's right.
Is you get, let's say, 100 shells. That's the money supply, and those shells are traded around, and that's the money supply. And as the village grows, they might need to increase the money supply and say, look, these shells are not enough. So they get something else, a different shell that represents 10 of the smaller shells. And so you end up with denominations. And that's fine in a simple system, but we are no longer in a simple system. We are in a system where the increase in productivity that we've experienced over the past 100 years has needed a commensurate increase in the supply of money to represent it. And so in the 70s, we went off the gold standard. Everybody still talks today how that was just a calamity, and going off the gold standard was terrible. But if we hadn't gone off the gold standard, we literally would not have enough money to represent what the productivity in our economy and our global economy is. So we had to. And so here's how money is created today.
Okay.
A certain amount of money is printed, right? So $3 or $4 trillion. And that printed money is increasing, and they literally print more $100 bills and they put them out into the system. But that's a fraction of our money supply. The actual money supply is lent into existence. It is literally lent into existence. So when you go to the bank and you borrow $100,000 to buy a house, or I guess nowadays a car, right? And that bank says, great, I'm going to lend you the money. They don't actually have $100,000 to lend you. They are actually creating the money as they lend it to you. So they have a reserve, they have about 10% of that money, and then they're allowed to basically create the rest of the money. And it's a complicated back system where, there's credits and debits along the line. But the net effect, and what I think you need to understand for this purpose for this episode is that money is created when it is lent, when it is borrowed into existence. And so that is fantastically important. Mm-hmm. Because if you understand that money is lent into existence, then you realize that the way to increase money in your life is to actually borrow it.
Wow.
So there's an old saying that you used to go, you're worth what you can borrow.
That's right.
And so if you look at businessmen today, right up to the very wealthiest of them, they use credit. Every company out there uses credit. And you know, the idea that, I don't want to owe anybody anything, if you think about that, it's incredibly limiting. I want to know who of us, unless we inherited money or struck it rich or something very early in our life, who of us could have ever even bought their first home without credit?
That's right.
I know I certainly couldn't have.
That's right.
I needed credit because I didn't have the full price of the home. I had saved enough for a down payment, which was already fairly challenging. Mm-hmm. And then, okay, now I could go to the bank. I had a good job, so I could show, hey, I can pay this back. The bank says, okay, I think you can. We'll take your down payment, and then we'll lend you the rest of it.
This hits home so much for me, because I'm sure a lot of my brothers and sisters from Senegal would understand. I came to America very young. I was 23. And back then, I remember they give you a credit card, Amex, just the minute you come, it's just like, go ahead.
Yeah.
And not understanding credit had synced most of my brothers and sisters, immigrants, because they did not understand it.
Right.
I was the first part, the ones that are afraid of it. I'm not going to touch it. So yes, I end up having a great credit because I didn't do anything. I didn't just mess it up, right?
Yeah.
But most of our peers and brothers and sisters had messed up their credit. Why? Because they did not understand what you just explained.
Right.
How important it was to respect not only your credit, but the lender.
Well, I mean, in this society,
yes,
having good credit is more important than having a college degree, I would say.
Wow.
I mean, just having access to credit is the difference. And if you look at people who don't have access to credit, that live on the cash economy, they often don't even have access to banking at all, not even credit, much less, but just banking, just getting a bank account. So they pay a premium just to get their own money. They pay a massive premium. They'll pay a check cashing company a huge percentage of their check just to get the cash because they don't have a bank.
That's right.
And so if I were advising a young person today,
yes,
I would say focus most in your financial world on your credit. Make sure you understand it. And thank God, well, one, I want to tell you, I didn't learn this until I was, well into my career, probably 10 years into my career as a lawyer.
Wow.
I myself didn't really care about my credit because, one, I didn't use any credit. I really was, other than a home loan in the beginning, but I really was one of those that I just didn't want to borrow and owe people. Mm-hmm. However, as I started to advance in my career and my own goals financially, I realized I'm not going to be able to save this much money. If I want to have access to that, I'm going to have to borrow. And so I fortunately had a client who was an expert in credit. Okay. That was his business. And so he explained to me the credit system. Mm-hmm. And there's very few people, according to him, that truly understand credit. So once you understand it, you realize, okay, I can actually work this system to give myself good credit. That's so right. First of all, you have to have credit to have good credit.
That's right.
So when you say, I have no credit, you don't have bad credit, but you don't have good credit either.
Right?
You have no credit.
Yeah.
You haven't developed it.
Yeah.
So you need to get some installment loans. Mm-hmm. That would be like a car loan. Even like back in the day, a gym membership used to be an installment loan.
Right.
You'd agree to pay $2,500 and then they'd give you credit for the payments over time. Mm-hmm. They changed that now for gyms at least.
Yeah.
But some type of installment credit And then you've got to pay it on time. You have got to never, ever, ever be late. So I train my kids, put on auto debit,
Yes.
make sure there's money in there, even pay a month or two ahead. So if there's any kind of mess up with your system, your bank, your account, whatever, you're actually ahead a month. So you have a month to figure it out.
That's right.
Because you do not want to start being late.
No.
So get some credit.
Yeah.
So I remember I wanted to build a house, and it was more than I had ever borrowed before. And I went to my banker and I said, this is what I'm going to need. And I told him the number. And he said, okay, let me check. And he ran my credit and he goes, okay, you need to fix your credit. You need to make it higher. I said, okay. I really don't use any credit.
Yeah.
Right?
How do I do that?
And so he's like, well, that's the problem. You don't have anything reporting. And so I went to my friend, who's my client, and I said, what do I do? And he goes, okay, you need to get 3 credit cards. You need to use them. And then you need to get the limits increased, because your credit score is a function of many things, but one of them is how much access to credit do you have and how much of that have you used. So if you have a credit card and you have a $10,000 limit, but you've borrowed $9,900, that's going to be negative on your credit.
Huh.
Because you've borrowed almost all of it.
All
and
of
so
it.
they don't see you as having very much bandwidth left.
Okay.
However, if you have the same $10,000 credit card limit, but you haven't borrowed any, or you've borrowed $1,000 and you pay it every month, they're going to see you as, oh, that's good. That person has access. He can get another $10,000 anytime he wants through this credit card.
Yeah.
So he said, get 3 credit cards and then get the limits up as quickly as you can. And I said, well, I use Amex. He goes, the problem with Amex is it doesn't report to the credit agencies.
Oh,
so it
really?
doesn't actually help you.
Oh, okay.
At least when I was doing it. I don't know if today they do. But at the time, Amex was a charge card. It wasn't a credit card.
Yeah.
And so it didn't report and it didn't help you.
Okay.
Didn't hurt you, didn't help. It just didn't do anything.
Yeah.
Well, it could hurt you if you went to collections, which is
That's
another piece of this. So get credit cards and then get the limits up. And he said, how you get the limits up is that you pay them and you use them. Like, go ahead and charge $9,000 on your $10,000 credit card, but pay it back quickly.
Quickly.
Like right away, or 2 months, 3 months. Then you go to your charge company, your credit card company, you say, hey, I need $20,000. They look at your history and they see you've used it and you've paid it, and they're like, sure, no problem. And then they'll increase it for you. So as you increase it, you end up with more access to credit. So up to a point, this is good.
Yeah.
Now, after a point, it becomes negative. So if you have 15 credit cards and you have $300,000 worth of limit, the overall net effect is going to be negative because you have too much credit.
Too much credit.
They don't want you to have too much either, because then they feel like, oh, they could just get it all at once, and then they're over leveraged. They have too much.
You wouldn't want it anyway.
Well, a lot of people just keep getting offers and they keep saying yes to credit cards, but they don't use them, and they just end up with this ridiculous amount of access because I don't know why, they feel like, why not take more? But you don't. You want 3 credit cards, and you want those 3 credit cards to have really reasonable limits. In your case, whatever that is for you, it could be $5,000, it could be $50,000.
Okay.
But you want to, and you want to keep working on it, and you absolutely want to pay them on time. Do not ever miss. If you can help it, you don't ever want to leave a balance either. Okay. Because even the best credit cards, the very best credit cards, still charge you a very high interest rate compared to a bank. So you want to pay off your credit cards. Do not use your credit cards as an installment loan. Because a credit card at the best might charge you 12% and at the worst 28%. I mean, that's a huge amount of interest.
That's too much.
Whereas even in today's interest rate environment, you could get a car loan for 6%, you know, which is reasonable.
Yeah.
So you need your 3 credit cards. You need to build the limits up on those. You need some installment loans. So a car is a great place to have an installment loan. A home is a great place to have an installment loan. Okay. Pay them on time. Don't ever be late, right?
Well, listening to you, again, I'm the one who dumb it down to every day what word to use so that I know where I'm standing. And what I hear right now is trust and communication.
Yeah.
The bank is looking, can they trust you? Are you trustworthy? And are you communicating?
Correct. Yeah, every payment is building both communication and trust.
That's right.
Right? Every payment is saying something to the bank.
Good. Yes.
And to the system. So now you have to understand we have 3 credit reporting agencies.
Yes.
And those agencies get a feed. It's like an RSS podcast feed for Spotify, but this is a feed of all your payments every month. And so they know when the credit card company, when you're late, it feeds to the credit agencies. Hey, he was late this month.
Yes.
And those credit agencies have their own formula, and they say, oh, well, that's going to give him a demerit. Yeah. So your credit is going down. And so it's not that one late payment is going to turn your credit from 800 to 700.
Yes.
But it definitely will knock it down from 800 to 780, even in one late payment.
Right,
just
one.
And so it's very important how you understand that they are reporting.
That's right.
Right? So they are reporting. So if you borrow money from your Uncle Vinny,
yes,
he's probably not reporting to the credit agency. So when you don't pay it back, nothing happens to your credit score. Yes. Now, Uncle Vinny might be pissed, and something might happen. But
I think something really end up happening. And this is where I wanted to take this conversation, because we're talking about people already to have credit cards, to want to have a home, a car. Tell me, what percentage of the population is there
that has enough credit to even get a home and a car?
Right.
Yeah, it's less than you would hope or imagine.
Exactly. So when you dial it down, we're talking about people that the bank for them represent an aunt, a uncle, Uncle Vinny, you know what I mean? A friend, your parents. And we see a lot of relationship messed up.
Yes.
Because the person doesn't understand that it doesn't matter that it is the bank or a system out there. It applies to the same when it comes to any individual.
Yes.
And this is why I wanted us to talk about it, because for the longest, I didn't have to use it. Most of us don't until you really need it. But there is a way to be, attitude to have, a discipline to have within yourself to understand the system of borrowing.
Well, and again, the credit, I think the reason it's important to go over the credit bureau system and the bank system
That's right.
is because it applies all the way through to your personal life.
Yes.
Right. So believe me, if you can master the credit system, the banks, then your chances of mastering your personal relationships around money are much higher, much higher.
That's right.
Especially when you're the bank.
Yes.
Right. So for some of us who are in the relationship with our family, are often people come to us and say, hey, can I borrow money? We have learned this is how the system works.
That's right.
And so we can communicate it and we can set up the rules around it and help them.
That's
because
right.
oftentimes if someone's coming to you to borrow money, it means they don't have access to the banking system.
That's right.
And there's a reason.
Yeah.
Because they haven't built it or they destroyed it.
Exactly.
Right? They had access and then they just abused it and then that access was taken away.
And those people need attention. And I really, for me, I'm focusing this about those people that are left behind, that like I said, your family is your bank. But too many relationships are messed up because of that. So how can we help? I mean, we're doing it all the time. But I recently, by the way, I have a friend that borrowed money.
Yeah.
Right? And the deadline come, there is no communication.
Right.
Please don't do that.
Yeah.
It's just, even if it takes to say, I don't have it, this happened to me, I can have 50%, but communicate. Is that important?
Well, even in the official banking system,
right.
I can tell you that if I call my bank, which I have a relationship with, I know people there, and I say, you know what, I'm going to be late on a payment, and I tell them why, they will understand. They'll go, okay, that makes sense to me, and I say, please don't report this. Please don't. And they'll say, sure, I got it.
That's right.
Because at this stage, I've built a relationship with the bank to where I could do that. Now, I haven't needed to do that, thank God, but I know that I could. I know that I could call them and they would give me a pass, at least to a point.
That's right.
They're not going to just give me a pass if I can't hold it together.
Right.
But they will say, well, I understand, the circumstances that make sense.
Right. Yeah.
Right. And so it's very, very important to communicate. And again, you're building trust and you're building a track record.
That's right.
And people look at that. They look at that in everything.
Yeah.
I mean, again, we say it all the time. How you do anything is how you do everything. And so how you handle your money in the borrowing and lending capacity is how you're handling it in your own life. Right.
I believe so.
So back to this credit system, I don't want to leave the thought incomplete because I'm sure some people were like, I'm learning, I want to know the rest of it.
Yes, me too.
So paying your installment loans, having access to credit, very important, right? That's going to build your credit. If you go to collections on anything, that's an instant debt. I mean, that's really bad. That's collections means you're not late, you just didn't pay it.
You didn't pay it at all.
Now, what my client, what his company was, is he helped people clean up their credit. So there is a system for reporting and disputing your credit. So sometimes you get reported on and it's not legitimate. It's actually an error and they keep making the error and you can't get it cleaned up. There's a process. So I had gotten this tablet. This is way back in the beginning. And I signed up for Sprint to
tablet.
Yeah, your tablet. And I signed up for Sprint and it was $10 a month or something.
They're still charging, by the way.
It was just a mess up. I mean, they just didn't get it right. I could never get it corrected. And then finally I was like, look, I paid this bill literally 3 times. I'm just done.
Advantage.
We're going to report you to the credit. And at the time I was like, go ahead. Like I was more upset. That one little thing went to collections and that was stopping me from building a house.
Wow.
It was a huge thing. And so I'm like, I got to clean this up. And so the only way I could do it is actually dispute it. And the good thing about disputing it is that the credit agencies didn't lend you the money. The bank lent you the money. So they're in the middle. So when you dispute it, you're disputing it with the credit agency. They have to then go to the lender and say, hey, this is under dispute. While it's under dispute, they have to take it off.
Okay.
And then the lender has so much time to come back. Well, after 10 years, Sprint didn't have any interest in answering that. And so they didn't answer. And so my dispute stood, and therefore it was removed from my credit.
Beautiful.
Right?
Yeah.
And this is fairly common. It's usually the bank or the lender doesn't really care about, they don't care about damaging your credit. They at this point, it's been written off.
Yeah.
They usually don't bother to respond. And therefore, you can get a lot of even very bad stuff off your credit by hiring somebody to dispute it for you. It's usually a law firm that's their job, and they dispute it, and then they kind of manage that communication for you, and they can clean up your credit. It takes time, but it's very valuable. So what I recommend is you have to know what your credit score is. What I learned is that you go directly to My FICO.
Okay.
I pay $29 a month to have direct access to all 3 scores, and then my full report quarterly. I don't use any of those free credit reporting services. I was instructed not to use any of those, to just pay and get the real information from My FICO. And so that's what I do. So I can go on my phone at any time and I know exactly what my credit scores are. I can see, I have caught some stuff when I look where I'm like, hey, what happened? And in some cases, an auto payment had failed. And it was late because my auto payment failed for some reason. I didn't know. And I was able to get it fixed and get it corrected. And so you can keep on top of it. It's just as important as managing your health.
That's right.
Or checking the oil in your car. In fact, it's more important than checking the oil in your car.
I think so.
I mean, to know. So right now, someone who has really good credit.
Yes.
Has especially a long history of good credit, 20 years, 30 years. I mean, you can basically buy anything you want. You can walk in and say, I want to buy a $500,000 Ferrari. And you're able to do it because your credit score, you don't have to have $500,000. Now, it's a different question whether you should.
Yes.
Right? I'm not saying that.
Yeah.
But I think it's very valuable to be able to.
Yeah.
And to not always have to have the cash for everything. So wealthy people use credit. Why do wealthy people use credit? because they value the cash and they know there are times when credit won't be available and they need the cash. And so in order to leverage their return, they borrow. And so you can invest. So if you had even, let's call it $10 million, you think, wow, that's a lot of money, $10 million.
Right.
Well, you can make $10 million of investments.
Yes.
Or you could make $50 million of investments. What is your return on $10 million of investments at 10%? That's $1 million a year.
Okay.
What is your return on $50 million of investments at 10%? $5 million a year.
Right.
So by borrowing, you leverage up. And once you feel comfortable with your investment,
yes,
with what you do, like many of my clients, they know they can make 15% year over year over year over year. They know it because they do it. They're investing in their own business. They're investing in themselves. They're investing in what they do. So they know they can make that return. Yeah. Why wouldn't you borrow at 5% to make 15%?
Yeah.
In fact, if you're not borrowing, you're just missing the opportunity. Now, again, there's a lot of hangups. People say, well, I never want to borrow because I never want to owe anybody. That's totally fine. Yeah. I'm not saying anybody has to borrow, and there are really lots of reasons not to borrow.
Yeah.
Because it's also a little bit like a drug. Once you start borrowing, you're like, oh, this is easy. And so you can easily become over-leveraged.
That's right.
And so that gets into a conversation about understanding your cash flow and your commitments and what leverage does to you, because it's not all upside.
No.
Borrowing is not all upside.
And it's not for everybody.
No. But my personal feeling is that the last thing I want is to have no capacity to borrow.
Yes.
Because I know in my life, some of the things that I've been able to do were only because I was able to borrow. Right? Yeah. I don't want to over borrow. No. And the banks themselves try to put these controls around you by looking at your debt to income ratio. In other words, if your income is $100, then they say, well, you should only have $40 worth of debt payments, installment payments. And so they're always looking at that. So at some point, the banks will say, hey, Doug, you've been a great client, but we're actually done lending to you right now. You just have a lot of debt. And so therefore, we're going to stop. And so, but it's really up to you.
Yeah.
Because usually you can pretty easily over leverage, because a lot of credit cards don't do that. They just lend you.
Oh, absolutely.
Car companies, they don't do that. They don't really care. I mean, most companies, well, they do it, but not as strictly. So that's kind of the system. There's a lot more to it. Maybe we'll do another show where I'll invite my client on and we'll go deep into this.
Oh, that would be great.
Yeah, I think that would be great.
But for today, what I would like for you to help us clear is this new generation, and immigrants that don't really understand this American system. Right. That was very clear. I guess if you didn't understand it till now, maybe you get some clarity around this. And if you have more questions, go ahead, ask them. But definitely for somebody who had fear around it, how to help them get back the confidence they need to get back in the system, to trust the system. Yeah. The ones that do have their credit messed up, how to clean it up and be back in the system.
Yeah.
Right? You have ideas about that? I mean,
sure. So first of all,
more practical, really.
So first of all, you have to decide whether you want to be in the system. Yes. Some people do not. They just don't feel comfortable, and they just feel like it's too much. But I would encourage you to say yes to being in the system. I think it's worthwhile.
Okay.
So first of all, you have to understand that when you borrow, you are making a commitment to pay the money back.
That's right.
On the schedule that you agreed to.
Yeah.
Right. So let's just say you get to this country and you're given your first credit card. Like I remember they gave everybody in my college a credit card for $500, and I watched all my friends spend $500 and then throw the card away and never pay the bill.
Oh my God!
For $500, they ruined their credit, and to this day, many of them still don't have it.
By the time I come, it was $10,000 with Amex. And most of the Senegalese I know, they broke their credit
for $10,000. Yeah, so
Absolutely.
they destroyed the credit for a one-time thing.
Absolutely.
So decide whether you are serious about having credit, and to do that, you have to decide that there's value to it. Because if you don't understand the value, why would you bother managing it? Because it takes work, right?
Yeah.
So I think that it is incredibly valuable. you can most of the Senegalese that I know that we're related to or that we have connections with, they make enough money to buy their own home. They have good jobs. They're working really hard.
Yeah.
They can't buy their own home because they can't have credit. They don't have access to credit. Yes. So they're renting, and they haven't gotten the advantage of this massive increase in home values for the past 20 years.
Yes.
Because the home is the very first thing that most people build their core wealth with. They buy a home, and then that home goes up in value, and then they finally, when they sell it, wow, man, they got actually a big chunk of money for the first time in their life.
Exactly.
But if you never bought your home, you never have access to that.
And sometimes you're afraid of the system, then you go build in Africa, but you're not retiring there yet, and you have a home that you left with your cousin or somebody, and here it's gone.
Well, and you could have done it here, and probably gone home with $1 million and just bought a beautiful home there instead of piecing together.
Absolutely. And this is why it's so important for me to understand and to help this new generation that is coming to just not buy into the fear of their parents, to understand the system and to see how it works.
Yeah, so you have to decide you want to be in the system. So that's number one.
And you know what? I don't even know if it's possible not to be.
Well, it is.
Unless you are wealthy and your parents are giving you the money, the way it is in America, how can you even live outside of the system? You're going to live, it's tough.
So it's tough, but how? It's being done.
Yeah.
Millions of people are completely outside of the system.
Yeah.
They get paid in cash or they get paid a check, but they go cash it immediately, and their lifestyle is literally cash based.
Yeah.
It's a very difficult way to live.
It is.
It's not good. So what I would say is that you do want to be in the system. Find reasons why. And then number one, go check your credit.
Yeah.
Go figure it out. Go pay $29 to MyFICO. Sign up. Get your report. Look at everything on there. And then if it's bad, if there's a lot of stuff on there, you need to find somebody to help you clean it. So clean it up.
Yeah.
And start working on it.
Yeah.
And even cleaning up half these issues on there will raise your credit score. So credit scores go from 850 at the very, very highest down to 400 is kind of the lowest. So you kind of start at 600 or something with no credit. That would be bad credit.
Yeah.
Right. 750 and above is excellent credit.
Yeah.
800 and above means that you're micromanaging everything and you're making sure. It's very hard. Yeah. Very hard. I maintained 850 credit for a long time, but I mean, it is so hard because I had to watch that thing all the time. The reality is 850 credit and 790 credit, it's pretty much the same.
The same.
Right.
Okay.
So as long as you're above 750, you have excellent credit. Above 700, you have fairly decent credit and you can borrow most stuff. So look at your credit, decide I'm going to manage this, and start getting things cleaned up.
Yeah.
Follow the rule we just talked about. Get your first credit card if you can. Even if you have to get a prepaid credit card because your credit is bad, and you had to say, okay, well, I'm going to put a deposit of $500 and they're going to give me a $500 limit, it still counts. And you can start building your credit back by borrowing and paying it back, borrowing and paying it back. So start building a track record. When you borrow for a car, that's a great installment loan. Okay. And oftentimes, as soon as you get even reasonable credit, you can get a car because people understand we all need cars. And so those things practically, but you've got to pay attention to it and you've got to take it seriously. Yeah. And what I would say is that as you're doing that with the banking external world, you should go and do it with all your personal relationships too. So if you've borrowed money from anybody in your life, I would go and clean it up with them. Now, that doesn't mean you're going to necessarily pay them back. You might not be able to. Yeah. It might be that you borrowed so much that you'll never be able to pay it back. But go and address it with them. Tell them, because energetically, there is no difference, right? We're working in an energy world. And so you can't have good credit with the credit reporting agencies and bad credit with your family and friends and expect that your life is going to be in alignment. No,
at all. And it's important to really say this.
It's very important to say it because people think that you just... you can somehow separate things. You cannot.
You cannot.
So if you have borrowed money from anybody, go and clean it up.
That's right.
Go and tell them, I know that I borrowed this money from you. I know that this is, I know I have not paid it back. I know I did not pay it back when I said I was going to pay it back. And I'm sorry, and here's my plan around it. And it could be, I'm not going to be able to pay you back and I'm asking your forgiveness.
Yes.
Or it could be, I'm going to pay you back $100 a month until I get it done. you'll be shocked at what that person does.
I think that is so important to know that who you are, how you see yourself, and to stand for your words. That will propulse your life to be less fearing this system of America. Because, like you said, it's not separate.
It's not separate. And
of the work we're doing here.
You have to clean up your life
That's
all
right.
the way around.
That's
so now, if you're the lender,
yes,
if you're the lender to your friends and family,
yes,
you want to do the same thing.
That's right.
You want to not just let them, because it's something in their head. Mm-hmm. So it's okay, and you're very good at this. You'll say, "I lent you money. You agreed. I haven't heard from you. What's going on?"
That's right.
And you open the door for them to tell you.
Yeah.
And I know you're doing that for them.
Absolutely. Because, I know, and what do I get all the time? Emotionally, somebody blocked.
Yes.
At first, they're resisting that you're even bringing it up. Mm-hmm. Thinking, oh my God, maybe it's just she wants her money back. But I always make sure that they get it's not for that, it's for them.
Yeah.
Because if you start playing around and manipulating your own mind around money, what it tells me is you're going to do the same when it's time to borrow in the system.
You can't help it. You can't help it. You're going to do the same. So
yeah.
So clean it up with everybody.
Clean it up.
And it's hard, but you'll be amazed what it'll do with those relationships.
Absolutely.
They'll get cleaner.
Yeah.
You might find that people are just so thankful that they're talking about it, that you brought it up, that they'll tell you, I never cared about the money.
Yeah.
I never cared. I just wanted to know that you weren't the kind of person that was just going to pretend it never happened.
Right.
Nobody wants that.
No.
Nobody wants to pretend it didn't happen and ignore it. It's just bring it up. It's like,
bring
hey.
it up.
So practically, I think you can educate yourself about this, and you can get honest with yourself. Look, if you have to write down all the people that you have money, any kind of money thing with, anything at all, write them down.
That's right.
Get your credit report. Look at all the credit that when you sign up for MyFICO, you get a 3B credit report, which will tell you everything on there. And look at it and say, okay, well, you know what? Yes, that was me. Yes, I didn't pay. Yes, I did this. Yes, I got in an accident. I didn't have insurance. My car wasn't insured. I returned a damaged car, and they wrote it off, and then it went to collections, and I
be honest. Be honest. Be honest with yourself. That will remove the energy that you have around money, the understanding that you have around money, and the fear that you have around money. So it's amazing, because I think it's very important.
It's critical. And
it is critical.
For those of us who are a little further down the journey, and we've been able to establish our credit, people will come to us and say, hey, I'm on this journey myself. I cannot get this loan without a cosigner. I'm asking you to cosign.
That's right.
Here's my rule around that. Don't do it. No cosigning. And the reason is that you are now literally putting your credit in somebody else's hands. And I don't care if it's $1,000 for dental work. When you cosign, you can watch your own capacity just tank. So when I have had close family that have needed, for example, a car, and they asked me to cosign, I said no, but I will lend you the down payment so that you don't need a cosigner. I will lend you enough of a down payment, and then you can deal with it. And then if you mess up your credit, you're not messing up my credit.
That's right.
I'd rather risk that and never getting paid back the extra money I lent you than to lend you my credit by signing on your behalf. I only sign on behalf of my own kids for their first car.
That's it.
And then I make damn sure the payment gets paid. I will not let them not pay it. So, but after the first car, I'm like, you're on your own. So I help them build their credit, because it's very hard when you're 18 to build your credit. So I do it once with my own kids, and then that's it. They're on their own.
That's right.
And it's worked. They've been able to borrow, and now my kids, and also we have instilled this credit thing. Like, I remember our oldest daughter missed a payment.
Oh, wow. That was big.
She'll never miss another payment. She got her car repossessed because she missed a payment. And they repossessed it so fast.
After one payment.
Wow, one payment. And I said, well, there you go.
That's right.
And so
Lesson
she
learned.
got it. And but
and it wasn't even her fault.
No, it was actually a mistake.
Yeah.
But the point is that they went and repossessed her car so fast, but it made an impression on her.
That's right.
She got it.
That's right.
And now she's like, the other thing to know is things like cars.
Yeah.
When you make a payment in advance,
yes,
it gives you a cushion.
Okay.
It gives you a little buffer. Here's the other thing I love to do with installment loans is increase the amount of the loan. So if my payment is $350, I pay $400.
Yeah.
So $50 every month is going kind of ahead.
Yeah.
And so when you do that, you don't really miss the $50, but all of a sudden your 4-year loan is a 3-year loan, or your 30-year home loan is a 15-year loan.
That's
so
right.
just paying a little extra, if you can, pay them even more. So if you have a $2,000 a month home payment, pay $2,500 a month, or pay $3,000 a month.
That's right.
And you're paying less interest. Your net total cost of borrowing is lower, and you are building equity faster. So those forced kind of savings things are really good.
And that applies to somebody, again, who's outside of the system and is renting money from family or friends.
Yeah, right.
Same thing.
Same thing, yeah.
Right? And I love the fact that you said, I don't co-sign for other people, because energetically what you're saying, you can mess up. I work hard on having mine. You come and borrow mine.
And then I'm really upset with you when you have all your reasons.
Yeah.
I don't ever want to set that scenario up.
Exactly. You're going to disrespect mine, and for you it's nothing because you disrespected yours anyway.
Right.
Right? So again, don't do that.
That's my advice. You can do what you want, but
yeah.
That's what we do.
That's what we do.
Yeah. So
well, Doug, we covered a lot today.
Yeah, and it's only opening up a whole bunch more rabbit holes,
more.
I'm sure, that we need to drill down. But I hope this was really helpful, and please ask questions, specific questions if you want.
Yeah.
I really do want to help everybody understand this, because it is the difference between, having access to credit is so important. And when you become an investor, and when you become wealthy people use credit. Yeah. Wealthy people use credit. They are the biggest users of credit. And so if they're doing it, there's probably a good reason. And so you should consider, okay, maybe this idea that I'll never borrow is not the absolute ideal.
That's right.
But it's responsible use of credit. It's understanding how to use it and not overuse it.
That's right.
But you can't even start that journey until you at least have access to it, which means you've got to get out of the no credit cycle and the bad credit cycle.
Exactly. And what gives you that confidence is to clean up your relationship with money.
Yeah.
Right? And the people that lend it to you.
Well, if we define money as the human energy behind the dollar bills, then God, there's nothing more direct than somebody lent you money, a family member.
Right.
And you have a direct connection with that money.
That's right.
They brought that money into existence for you. Mm-hmm. You know exactly who it is.
That's
it
right.
was my brother. It was my mother. It was my cousin. It was my uncle.
That's right.
Clean that up. Go to them and say, I know, and here's where I'm at, and I can't pay you back. I'm sorry. I hope you understand.
Yes.
That is more valuable than just ignore it and never happen.
No, because when you do, you messing up your own energy around money.
Yeah.
It's all tight. It's all in one. You want more money? Clean up your relationship around money.
That's it.
Absolutely.
Perfect.
Thank you, Daddy.
So subscribe and ask us questions, please. And it's very important that you subscribe to the channel. It is a system. YouTube, Instagram, all these, it's a system just like every other system. So if you want the system to work, subscriptions are the way that system works. It's the currency inside of the social media system. So our goal is to get this message out to more people. Yes. In order to do that, the algorithm looks at your subscribers. So if you want to see me interviewing somebody really incredible, that will happen when I have a certain level of subscribers. They look at my channel and say, oh, okay, I will go on that channel. So
that's right.
Your subscription is literally the way that you exchange value in this with us. So I'm really asking you to please subscribe. If any of this was valuable to you, it costs you nothing, and yet it's very, very valuable to the overall system. So I really appreciate that. And we're learning this system, this social media system.
I know.
It's part of what we are choosing to master as this, because
as we go.
We think what we have to say around this is very valuable, because we're getting a lot of feedback.
And it's
certainly to us.
Yeah. We're not the teachers. We the students here.
That's for sure. That's for sure.
All right. Well, thank you.
See you next time.